In my last video, I addressed the importance of finding the right real estate agent. In this video, I'm going to address the importance of finding the right loan officer. Because finding the right loan officer will help you understand your purchasing power. And what that means is that when you understand your purchasing power, you understand how much home you qualify for, you understand your credit score, you also understand what interest rate you have, and your monthly payment. So let's start with your purchase price. When determining your purchase price, of course, in one of my last videos, I went over debt to income ratio. Once the loan officer identifies your debt to income ratio, he or she will be able to tell you how much home you qualify for. So with this being said, it is better to not exceed 25% of your gross income when it comes to your purchasing price or your purchase price. A lot of people look at that number and they say, oh, that means that I can't qualify for much home. But what it does when you stay within that 25% range, it helps you to be able to have expendable income outside of your mortgage so you're not house poor. You have to understand that the lender goes by your gross income, but you live on your net income. Somebody needs to hear that again, so I'm going to repeat it. The lender goes and determines your monthly payment based on your gross income, but you live on your net income. So what you gross is not what you take home. So if you stick to the 25%, it will be a higher percentage when it comes to your net income. That's why I always suggest 25%, because it keeps you from being house poor. You don't want to just live just to pay a mortgage. You want to live to vacation. You still have probably other bills that you have to take care of. So you want to make sure that you are not living above your means by having too much house payment. So that's why finding a good qualified loan officer is important, because that loan officer, if they have a heart to help their clients, they will make sure that you're not buying more house than you can afford. Various programs, again, loan programs such as the FHA, will allow you to go up to 50% of your gross income. So you would qualify for more home. But to be on the safe side, 25% is a really good gauge. And so when you find the loan officer, please make sure that you ask what your credit score is. A lot of buyers that come to me, they've had their credit scores pulled by the loan officer, but they never inquire about the score. You want to know what your qualifying score is, because knowing your qualifying score helps you to decide if you're getting the right interest rate. And so if you were told that you have a 700 or a 720 credit score and they're quoting you 4%, then you'll be able to question that, because you're on the higher end of a credit score, then that will give you a good gauge as to if you're getting a good quote for your interest rate, because your interest rate determines your monthly payment. So the higher interest rate, the higher the monthly payment will be. So you want to make sure that you do what you have to do in order to increase your credit scores. And if you want to increase your credit scores, you can always ask that loan officer, well, what can I do to increase my credit scores? And I've gone over that within one of my previous videos as well. So look for that credit video and it'll tell you how to increase your credit scores. Now that you know your purchase price and your interest rate, the loan officer should also let you know what loan program you qualify for. So I went over the various loan programs in a previous video, but you will know which loan program you actually qualify for, so that you will know what your down payment will be, the down payment requirement, and your cash to close. It's very important to know which loan program you qualify for. And then I would suggest you do a little research on the loan program. If they say you qualify for FHA, look up FHA, Federal Housing Administration. Look it up, see what it is, and the benefits from it. If it's conventional, you may want to look that up to see what that looks like for you. And then you could ask questions like, well, which conventional product or am I qualified for? Is it Fannie Mae or Freddie Mac? That's very important, to know your loan program and do as much research as you can on that loan program to make sure that it's the best one for you. If this video has been helpful to you, please like, share, and subscribe to my YouTube channel for more videos like this one coming in the future. Thank you so much for tuning in. Make it a great day.